Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Hello there. We know tax season is upon us, and if you're trying to figure out how to maximize your tax refund, you're not alone. Understanding tax credits and deductions, kind of a big deal, and it can also help you optimize your tax return and cut your overall tax liability. That sounds awesome. So let's talk about it today. Tax credit versus tax deduction. Welcome to the show. So tax credits cut your tax bill dollar for dollar by the amount of the credit. Tax deductions lower your taxable income, which might reduce your overall tax liability. Make sense? So while tax deductions are less impactful than credits, you might be able to claim both on your tax return. First of all, what is a tax credit? Let's dive a little bit deeper here. So when you're eligible for a tax credit, you subtract the amount of the credit from the overall federal income tax that you have to pay. This dollar-for-dollar reduction has the power to dramatically reduce your overall tax liability. It's amazing. Non-refundable tax credits can take your total tax liability to zero. Refundable tax credits, like the child tax credit or the earned income tax credit, entitle filers to a refund even if they have $0 in tax liability. Okay, example time. Let's say a married couple earning $120,000 with 2 children under the age of 17 can claim a $2,000 tax credit for each child. The child tax credit will reduce their tax liability by $4,000. Some important tax credits include the Savers Credit, where you can claim if you meet income requirements and you also contribute to an eligible retirement account. The American Opportunity Tax Credit, which allows you to claim a tax credit for higher education expenses when you or a dependent attend school. You can only claim the AOTC for 4 years, though. The Lifetime Learning Credit allows you to claim a credit for higher education expenses beyond that first 4 years. And if you pay daycare or other forms of care for a dependent, look into the Child and Dependent Care Credit. Now let's move on to a deduction. What is a tax deduction anyway? All right, so deductions lower your taxable income, which reduces your tax liability. Sounds like the same thing, but it's not. This is the amount of the deduction multiplied by your marginal tax rate. This is going to be a little more confusing, so let's dive a little deeper here with an example. Let's say that same married couple, filing jointly, earns $120,000 combined, and they have a marginal tax rate of 22%. If this couple contributes $10,000 to a 401k, they will have a $10,000 tax deduction. Given their marginal tax rate, they will reduce their tax liability by 22% of $10,000 or $2,200. So see the difference? Some of the most important tax deductions include business expenses associated with your side hustle, pre-tax contributions to retirement accounts like 401k or IRA contributions, and itemized deductions like property taxes, charitable contributions, and medical expenses. So what's better, a credit or a deduction? Tax credits reduce your liability by the dollar based on the credit amount you receive, while tax deductions only cut your taxable income. So consider a single person who earns $50,000 and spends $2,500 on higher education expenses and also contributes $2,500 to their 401k. So here's how that breaks down. This taxpayer is eligible for the American Opportunity Tax Credit, which cuts her tax bill by $2,500. She is also eligible for a $2,500 tax deduction because of her 401k contributions. Given her 22% marginal tax rate, the $2,500 contribution to the 401k only cuts her tax bill by $550. Tax credits are more powerful than deductions, but you rarely have to choose between the two. Take advantage of as many credits and deductions you qualify for to keep your tax liability low. Do I need to know whether to claim a credit or a deduction? It's a great question we get all the time. So unless you're filling your taxes out by hand, you really don't need to know which credits or deductions to claim. Here's why. The best tax software, including some free tax software versions, can optimize your tax return so you get the maximum refund based on your situation. Your eligibility for credits and deductions often depends on multiple factors, including your income and other credits or deductions you claim. The software can optimize these factors on your behalf. We regularly review the best tax software that is priced for any budget, user-friendly, and even comes with an option for a tax pro to help you when you get stuck. We have our top recommendations at thecollegeinvestor.com. Trust me when I say we make it pretty easy to choose which tax software is absolutely right for you. Now that you know the difference between a credit and deduction, you don't have to worry about it. Instead, compare the best tax software and let the system figure that out for you. It's at thecollegeinvestor.com. All you gotta do is type in tax credit versus tax deduction. You'll find this article plus links to all of the best tax software that we have reviewed. Again, it's thecollegeinvestor.com. You can also follow us all over social media if you have any questions. We'd love to get to know you too. You can just search for The College Investor and you'll find us. Thanks so much for stopping by today, and we'll talk to you again real soon.